What is going on? All right, well, fresh cut, fresh video. Hopefully you guys watched the last psychology video, and this video is going to be about entries. It's going to be a shorter video because there's not really much to talk about that I already haven't talked about, but I thought I would make a dedicated video on entries and recognizing, what is good and what is bad to know exactly how to become better traders. So let's get into it. Okay, as always, into the charts. First, a couple things to write down. So again, don't forget the patterns that we trade. We trade M's and we trade W's, right? Now, what is a good M and what is a good W? I did make a video about this, but I'm going to go over it again. A good M is the one that clearly shows a shift of structure. And a good W is the same thing, just the other way around. Are there M's that are 3 candles long? Yeah. Are there W's that are 10 candles long? Yeah. Are there W's that are 2 candles long? Probably not. But there are many different scenarios. Like there is no perfect M and there is no perfect W. Those happen 1 in a million years. And that's why we use all the other confluences in order to understand exactly why we do take those trades. So again, I'm going to go with the checklist of confluences. And again, I'm going to make this one in ranking of order. So failed BPR, best confluence. Second best confluence, fair value gap reaction. Third best confluence, liquidity sweep. Fourth best confluence, SMT. And fifth best confluence, IFEG. Now, a failed BPR is very similar to an IFEG, not necessarily the same thing. And I'll explain why in a sec. So that's the confluence list that we need. And again, I'll add it in the bottom. I guess I'll put it like over here. It is after liquidity sweep, so clean structure. Now, this order I always follow in my brain, and I really love seeing failed BPRs because they are so clean, they're so clear, everything makes so much sense. I need to see 3 out of 5 in order for me to actually believe in the trade. In order for me to believe that this trade is good. If I see 4 or 5 or 6, then if I see 6, I'm willing to risk 1.5 of what I usually risk. And entries come down to the following. There's such entries that are early and there's entries that are late. Early entries are, let's say we want to shift and we're continuing an uptrend here. An early entry would be here. If price traded into here and you didn't wait for this, that'd be an early entry. That's bad. A late entry is when we don't get a clean entry here and price already moves. Because again, I don't really give a shit where price is. Your stop loss is always going to be here at this low. I don't care if you entered all the way up here, your take profit is right here, your stop loss should still be here. Because that's the only reasonable place to put a stop loss. And this is why we use the 1 minute time frame, because the 1 minute time frame is the best place to take the best trades. And I don't go any lower than the 1 minute just because I feel like the 30-second is way too much noise and it doesn't make any sense. Now, in this M's and W's, there's going to be a lot of fake entries. A lot of them. And this is where experience comes to play. Again, we're in a W. Maybe we close here. Or maybe price pushes up into here. And then we wick down and go here. That's not a good entry. We don't enter off wicks. And also, we don't enter until the candle fucking closes. Get that through your head. The candle has to fucking close. Because if it doesn't close, there's nothing guaranteeing you confirmation. And I don't care if you had entered that the candle would go all the way up to here after. I don't care. Lose that trade. Miss that trade. It's fine. It's fine. It's perfectly fine. That's fine to miss out on that trade because that trade wasn't the way that you trade. But every other trade that you do take, that's the way that you trade. If that's the way you enter, then you're just gambling. You're not following these confluences. You're not trading the way that you should be trading. And it happens to me sometimes where I enter a little earlier. But it does come with experience. And I wanted to go over a couple of examples now of, what are good entries, what are bad entries. And we're just going to go to random places because, yes, as much as I do trade the New York Open, and I think that is the best time to trade, I don't think that's, this strategy is limited to that, right? So let's go here on NASDAQ and let's see just a couple of examples. For example, I can see something immediately right here. This is something really good. You can see we clearly have a fair value gap right here. There's a very clear imbalance. We're clearly reacting off it. And this is you know, during the middle of the night. Here's a really good entry. Fantastic entry, as a matter of fact. Why? Because we have all the confluences that we could need, or almost all of them. Liquidity sweep, sure, it's not a major liquidity sweep, but we swept a low. We have a 1 minute BPR that didn't quite perfectly form, but it's still good right here. We completely disregard that BPR and we form very clear structure. Oops, not that one. We go down here, we go up here, we go down here, and we go up here. The most clear W of all time. Now, if you notice, this trade actually failed, but your break even or take profit one should have been there. And that's perfectly fine. It is what it is. You know, with this, we have 3 out of 5. What do we have? Clean structure, super clean structure. We don't have an SMT, or maybe we do, but I'm not even gonna look. We have a liquidity sweep, and then we have an engulfing closure, and we have a 1 minute failed BPR. That's the one I forgot to add, engulfing closure. We fail this BPR. We see continuous moves up. We also have clear objectives. And look, you take a simple 1 to 5 risk to reward trade, hits in 3 minutes, just like that. Super clean trade, super well done. Couldn't be any easier. Now, let's try to find something else. Let's try to find a bad entry here. Let's try to find a bad entry that plays out ideally. So let's see for shorts. Let's see. I'm just looking around. I don't have anything specific marked out. Let's see. That was from yesterday. Let's go back to like a random place because I don't want to like have it be biased. So like, let's try to find one over here. Let's see. What would be a bad entry for shorts or for longs? Oh, here we go. Okay. I think this could be, yeah, okay, here we go. Here's a really good example. All right, so we're seeing very clear bullish intention. We're reacting off of a rally gap, so that's one of them. Boom, we have reaction off of a rally gap. What do we have here? We have a BPR right here with this BPR right there. Perfect. Now, do we have the cleanest price action? We don't, obviously not. The question is, are you going to enter directly off of the BPR? Probably not. Why? Because if you enter off the BPR completely, you're not even allowing for the lower high to be made. You're not even allowing for the lower high to be made. Again, we're trading an M. The M hasn't formed yet. This isn't a clear M. Yeah, sure. W. Sure, this is like this. Yeah, right? But it's not clear. I mean, you can see it yourself. Like, it's not the most clear W of all time. Like, you can see that it's like kind of like choppy, not the best. Sure. Was this a good trade? Did this trade play out? Yeah, it did play out, but it wasn't the right entry. At the same time, there's nothing telling you that this isn't a lower high. There's already nothing telling you that this isn't going to be a lower high. If you were really wanting to play it safe, you should have waited for a higher high up here. So that's why this is the right trade. This clean, super clean structure here. Boom, right there. And there's a second bad entry on this that ends up working out, but in the long run is not going to work out, which is, you know, we failed another BPR right here. We have another BPR right there, which is really an inverse value gap. We have this inverse value gap right here. Again, what do we have? We have a reaction off of a value gap, which is this higher time frame here. We have clean structure, very clean, very clear. We don't have an engulfing closure, which is fine. And then we have, in this case, a 1 minute failed BPR, so we can add that onto that. Why is this down here not the right entry? Because, again, if you go into the replay mode and we select a bar, and we select this bar, look at how this is working out right now. Just take a quick look. Do you truly believe that this is going to rip higher after, yeah, we did close above, but look at the wick we made too. Do you think this candle is going to be any different than this one? What if the same thing that happened here happens again and we actually want to continue lower? I want to see that confirmation. I want to see a continuation of that trend of us making a higher high. So what do? I wait. Oops. Oh, God. Oh, I don't know what just happened. Oh, Jesus Christ. Okay, we're gonna have to go back to that. I don't know where it is. Here it is. Okay. So what I was saying is that's why I wait, right? I wait. There's the next candle. Am I entering off of this candle? No, not yet. Because we haven't even closed above these highs. So again, we could be faking out. So I wait for one more candle. Thankfully, a candle does happen. Sure, we wick out, but that's fine. We closed above the highs. We confirmed a bullish move. And is my stops going to be here? No, I don't like my stops being there. I actually like my stops being here because in the case that we do want to sweep these internal lows, I'm going to give it wiggle room. And well, let's just say for a 1 to, let's just go for a 1 to 1.3. Doesn't matter. So what ends up happening? Boom, the trade plays out perfectly. Straight to take profit. Or almost. I don't know how long it takes. Yeah, boom, straight take profit right there. There's a good entry right there. Why? Because look at the structure. Look at the uncertainty. Again, same thing back here. You're entering off of this candle. Does this really look like the time to enter? Does this really look like the time to enter? I don't think so. I really don't think so. Yes, it would still have been a profitable trade, but something in me tells me that this isn't the right time yet. That there's always that retrace and then continuation. And if we miss a move, so be it. We missed a move. There will be another retrace and there will be another opportunity. So let's go back to another place. Again, I'm not really picking. I'm picking at random. So let's say right here. I feel like here's a good example too. All right, yeah, here's actually a very, very good example of what I would say is a good trade that just, in this case, it fails. And then a second trade that actually does end up working out. So what do we have? Okay, boom, market comes down. Sweep of liquidity, just like that. Sweep of liquidity. We have what would be an inverse value gap. There is no BPR here. Inverse value gap right there. We have, that's two. We have clean structure. Pretty obvious W right here. Okay, perfect. Now, what are we missing? We're not missing anything. We have three. We don't have quite the engulfing closure, but we have a pretty solid closure here. So we take our long. We take our long, stops below the most recent low, as you can see right there. Take profit at the highs. Okay, so be it. This trade loses. It's not a big deal. It's gonna happen. This isn't a 100% win rate, you know? Sometimes there's gonna be days like this. And I'm sure there's some other outside analysis that can tell you that we actually wanted to continue lower. Maybe we had a low that was down here instead of down here. So you also have to keep that in mind. This is just purely analytical in this point. I'm just like trying to tell you, you know, what is a good entry and what is a bad entry. Now, am I re-entering here because of this? Absolutely not. Look at this price action. There's nothing to tell me that this is where we're going to go. Nothing. Absolutely nothing. So I'm just not going to take a trade. Simply, just as simple as that. If I lost my first trade, okay, it's fine. It's not a big deal. You know, it happens. It's going to happen. It's fine. No second trade. That's perfectly fine. I want to show you guys a losing example because I'm trying to be transparent here. I'm trying to show you guys, you know, that I'm being transparent. I'm not trying to lie to you. Now, let's go for another example. Let's just go up here, see if we find anything. Okay, we're trading. Boom, we sweep all of these highs. This is a really good example right here. We sweep all of these highs right here. Do I expect bearish moves? Yeah, I can expect some bearish moves. I can see how. And what happens? Look, the most obvious M, you can see this M for miles, forms. What do we have here? We have, in this case, a 1 minute failed BPR right here. We have very clean structure. We have an engulfing closure. That's all I need. And we have a liquidity sweep from all of these highs. I mean, perfect. Stellar entry. Enter right here with the confirmation. Don't know why my stops are so big. I'm, in this case, because this is such a recent low, I'm going to put my stops above here. And because it gives me a good risk to reward, I'll put my profit, take profit right there. Nothing else I could ask for. Now, this would have hit at the market open, which is really nice. And this is a pre-market trade that if I see something this obvious, I will take it. But it's not usually what I like to see. But in this case, we have so many confluences, it didn't make any sense not to. You know, sweep of liquidity, clean structure, engulfing closure, inverse value gap, and BPR, probably even SMT. I'm perfectly fine with that. Again, this is all in the 1 minute time frame. This isn't anywhere else. Okay, here's a good example of a bad entry. This is a really bad entry. We take lows. Let's just say, okay, perfect. We sweep this liquidity, right? We swept liquidity. Now we can expect some type of retrace higher. What do we have? We have right here a 1 minute BPR. Perfect. Let's go back to the bar. Let's go by bar by bar. Okay, perfect. Boom, we're seeing moves up. Cool, that's awesome. I want to see a move lower and then a continuation higher. Okay, there's my move lower right now. Perfect, we have a 1 minute BPR. Now if we can fail this, I'm willing to take it. Am I going to take it right there? Probably not. Why is that? Because we have these two gaps right here protecting the bearish position. If we want it to be bullish, I would like to see a closure above this prominent 1 minute gap right here. Only then I'm willing to take the trade. Why? Because then that confirms, the move higher. That is a good entry. This is a bad entry right here. This is not a good entry, because look at what happens. We never get the confirmation, and then we just move lower, and you would have lost your trade and you would have gotten tilted. Again, is this a good entry? It's not a good entry because we're not flipping this 1 minute gap that is clearly prominent. So what ends up happening? We just chop around, and then we would have to recognize that. Boom, losing day, or sorry, it would be a break-even day or no trade day. That's perfectly fine. Let's go to another entry. Let's go to a more, I guess, unorthodox entry. And in this case, I'm trying to find one that, that is like usually, I don't see them very often, but these do happen sometimes. Like right here, here's a very good example of a very tight but good entry. Why? We sweep liquidity. We're clearly reacting off of a 4-hour value gap right here. That is super obvious. You should be able to see that from miles away. We come down, we make bearish structure. We make kind of a choppy move right here, and we do have a 1 minute BPR right there from a tiny, tiny little 1 minute BPR. Now, we also have very clean structure. Go lower, go higher, go lower. And I love when we have an internal sweep. That is like the best of the best of the best. What do we get after? We have an engulfing closure with this candle, a really solid engulfing closure with this candle right here, confirming that we've just now made a higher high. Now, am I betting against these two fair value gaps? Absolutely. Why? Because this is such a clear indicator of a trend shift that I'm perfectly okay with trading against them. And what I do in these cases is that the second that the fair value gap gets filled, so all the way up here, I go break even. Because usually, if that's the case and we want to be bearish, that's when we're going to start reacting. Therefore, we take our trade right here. Instead of taking it all the way up here, we take it over here, catching the move much sooner and being able to capitalize on the profits right there. So you can see to a 1.65 to these highs right here. Maybe there were other highs. Yeah, to like these highs all the way up here. Beautiful trade. Stellar, 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 stellar trade. I am 99% sure I took this trade. That's a really, really good entry. That's an A+ entry. Okay? That's basically it for the entries. Again, I'm going to try to find a very unorthodox one, which are the ones that, you are pushed up like way, way high and you just take it anyway. So I guess this is not a bad one, but it's not a good one. This is another example, market opens, we sweep lows, clearly. We see a trend shift right here, and we see a small retrace with a clear disrespect of this bearish order flow. Super clean closure, engulfing closure, really shitty price action. So not good structure, but we're reacting off of a value gap. We have a liquidity sweep, and we have engulfing closure with an inverse value gap. So that's 4. And yeah, this isn't the greatest W at all, because this is, this kind of unorthodox W. But you do have to recognize that if price is going to be bullish and it truly wants to be 100,000% bullish, that it will be bullish. Like this is clearly pushing so much that you don't even have to wait for you don't have to wait for the second M. You don't have to wait for it. In this case, it's so obvious that we want to go higher. We accumulated, we broke out, we want to go higher, just like that. Go break even at first take profit, which should be this high all the way up here. And then you can, if you get a bad entry, maybe you would have gotten break even here, which is unfortunate, but that's fine. But that's like another example of what would be, I would call this like a B+ entry. So I'm gonna make a little bit of a tier list here just to end the video, because again, this is gonna be a shorter video. So tier list of entries. A++, or A+, we'll just do, would be 4 or more confluences, clear objectives, and clear structure. Sorry, I guess in this case, 4 or more confluences. If it has a failed BPR, it can be 3. As long as clean structure is there. Why do I need clean structure in that? Because if I have a 1 minute failed BPR, then, and I have clean structure and I have clean objectives, then it's gonna work out. It would be 3 confluences without failed BPR, choppy price action with good volume. B plus would be clean move with good structure, 2 confluences of solid magnitude like BPR, or in this case engulfing. Again, most of the ranking is kind of based on market structure and like how we are delivering, which is impossible to show you guys, you know, based on this, because it's like how the candles are moving and how much the volume is moving. And then honestly, I don't even take B trades. B trades are just like 2 confluences with potential moves that chop around. But usually these last ones get break even. And I'll show you guys, to end the video, show you guys an example of a B trade, which is actually on the one I took on Monday, I believe. Yeah, the one I took on this Monday. So let me show you guys that. You can take a screenshot of this, whatever it is you need. So I'll just leave it there. Now let's go back to here and show you guys the example of what is a B trade, because I haven't shown you guys what a B trade is. Let's go to Monday. So this is Monday. Perfect. So what is Monday here? We have a rip of market open, and we have a retrace, and we have a move higher. Now what happens? I got a little bit greedy and I entered here. I entered like right here, because I thought we had so much bullish momentum that we weren't really gonna move any lower. And this is a B trade. I mean, we have 2 confluences. We don't even sweep liquidity. We just have a fair value gap reaction and an engulfing closure. Literally two confluences. And look what happens. I mean, we almost get stopped out, and I end up going break even and getting break even. But you know, the trade would have worked out, but it's just like such bad delivery. You know, I don't want to be stuck in this trade for what? Like for 2 hours. For over 2 hours. I don't want to be stuck in this trade for over 2 hours where I can go in the negative multiple times. I want to see a clean move. So that's an example of a B level trade. But yeah, that's basically it, to be honest. I don't really know what else there is when it comes to entries. The next video is going to be about, you know, risk management and how to trail stops, which is going to be pretty interesting. I believe that is a very important thing. You know when to trail stops and when not to trail stops, and you know how much to risk and how to calculate lot sizing and all those things. So I will catch you guys in the next video. I hope you enjoyed this one. I really want to make these like educational content videos a little bit more serious, and I'm gonna start posting on TikTok a little bit more serious videos, because I want my brand to go in that direction. So yeah, I hope you guys enjoyed this. Leave a comment down below if you want me to cover anything else, or if you have any questions, you know, add me on Discord and join the server. Literally ask me anything. I want to help you. I'm here to help you. Okay? All right, I'll catch you in the next one. Peace out.